Hello everyone and welcome to another edition of CEO and Market Expert Interviews. I'm your host Lucian. Most of you know me as Triangle Investor from social medias. I'm joined today by Corey Diaz, Anfield Energy Chief Executive Officer. Corey, it has been a while since you were the last time in my show. Welcome back.
Thank you very much. Thanks for having me.
Corey, we have a lot to cover since a lot of things happened in the last few weeks, months with Anfield. The first thing I would like to cover is the termination of the agreement with ISO Energy. Can you walk us through the process of this termination, details, rights and obligations coming from it? Give me some color on that.
Sure. So, as you know, we did have a plan of arrangement in place with ISO. When we went to the court for the final determination, the final sign-off, the judge decided that he provided credence to an alternative financing offer that was put in place or put up for consideration by Uranium Energy Corporation. The judge decided that we should let the public know about the financing offer and then hold a shareholder meeting so shareholders could make a decision, having full knowledge of all offers on the table. So the appeal that we launched into very soon thereafter, it was slated for the end of January. We did look for an extension from ISO of the deal because the outside date of the deal was December 31st. We didn't receive an extension, and so at that point, we were considering our options. We obviously still had the financing offer on the table from UEC. There was a JV offer made by ISO, which was not as appealing as the plan of arrangement, and so it was fairly easy to decide which direction we were going to go, and so we had to make a business decision, and so we did, and that decision was to work with UEC, accept UEC's financing offer. We also had our credit facility provider, Extract, providing even further funds, additional funds to us, so we could have about $26.5 million available to us to move forward. And so, at that point, it made much more sense for us to move with the UEC offer. As I said, it was a financing which was above market. It's from an existing investor. The shareholder would have just under 18% post financing, and being partnered with one of the largest uranium companies in North America, is a great position to be in, especially as we look to move forward to getting a U.S. listing. Having the guidance of UEC is already done that. I think is something that's very appealing to us.
Definitely. Just quick return on ISO Energy. They submitted an alternate joint venture proposal, like you said. That was January 8th, and they elected not to extend the arrangement beyond December 30th, the end of the year. The proposal was not viewed as favorable for the company. Can you tell me more about the proposal and why was it rejected?
We can't really get into details as to the proposal itself, but what we can say is that it was inferior to the plan of arrangement, which in our view, the plan of arrangement was, what we'd agreed to. And then we'd have to assess the new joint venture, compare it to what was on offer from Uranium Energy Corporation. And in our view, the Uranium Energy Corporation was far superior. That offer is far superior. So, in our view, as I said, we were already partners in some ways with UEC, given that it was a longstanding investor in the company, has held its shares since 2022 when we did a transaction back then, and we've looked to transact with UEC over the past few years. They still hold a number of hard rock assets within the portfolio, and so those assets would fit nicely into our portfolio, and so. We still think that there's opportunities for business down the road.
Okay, like you said, 26.5 million financing was announced. Part of it is closed. Where's that money going, Corey?
So the money's going to do a few things. We've obviously got some debt that we need to pay off. We need to pay ISO back. We need to replace an indemnity that ISO put in place for the Shootaring Canyon Mill. So those funds will be repaid and will replace the indemnity with some of the funds coming in. And then we'll be looking to put the money into the projects. So Shootaring Canyon Mill, we can do some work, prior to updating their license. So we can do some deconstruction at site. We can replace the generators. We can do some cleanup at site, the leach tank area, a few other things. We can put money into the Velvet Wood project, Slick Rock. We did some drilling at Slick Rock in Q4 of last year. So we have some results there. We'll look to update the resource at site. So we've got the U.S. listing that is going to cost some time and effort and money to move forward. So that's something else we're going to be looking to do. So there are a number of different things that we'd like to do with that money. Advancing all the projects is the primary focus at this time. And so, as we move forward, we're going to, focus on getting the mill up and running. The review of the license had been paused while we're going through this process. So we're restarting that process with the state. And then, more work at Velvet Wood, get the plan of operations ready, and get an updated resource at Slick Rock, which could then lead to, additional economics being placed at Slick Rock. So we've got a lot of things that we're going to be looking to do.
Yeah, I would like to cover those projects, and we will do that. But before, I have a few more questions. How much money actually do you need for the restart of Shootaring, and how do you plan to find it?
Yeah, the restart of the mill, including a new vanadium circuit and the existing uranium circuit, is probably about $65 million US. So we're just scratching the surface at the moment in terms of what we can do. We're doing as much as we can ahead of getting that license renewal in place, and that includes kind of cleanup at site, putting new power at site, which would allow us to do more work at site. And it's probably kind of an 18 to 24 month process. But as much as we can get done in the near term under our existing license, I think we're going to, push forward to do that. And then I think as we go, into the U.S., we'll be looking to raise those larger sums because they're a larger pool of money. U.S. assets for a U.S. focused investor group, I think, is important. And so there'll be opportunities for us to raise the monies to cover off the cost of the mill.
Okay. UEC now holds almost 80% ownership of Anfield and 24.2%, if I'm not mistaken, on a partially diluted basis. Will they nominate a board member, and how will this cooperation look like in the future?
They do have the right to nominate a director. Nothing has come our way so far. We've had a number of productive conversations with UEC with regard to moving things forward in terms of the U.S. listing, in terms of, looking for ways to, kind of release more funds that, say, held in collateral, within the portfolio. So, at this point, it's still very early days. We're still kind of, figuring out exactly how we're going to partner going forward. But as I said, we've had a relationship with UEC for a number of years, and we've had opportunities to transact in the past. And so, I think the aim going forward is to, find a way to, work on getting some of those transactions completed, obviously in a higher price environment. And I think that'll be driven by kind of the U.S. listing.
Yeah, when you mention a listing, do you plan to do it on New York Stock Exchange, Amex, or Nasdaq?
I think the quickest path is probably NYSE American. I think we can always upgrade from there to Nasdaq. But I think for us, we're going to be focusing on getting onto a U.S. exchange to start, and then hopefully attract significant investors. And once we've been trading there for a while, we can decide if we want to stay where we are or move up to another exchange.
Okay, let's cover the projects and their current status. You covered Shootaring Canyon mostly, but I have another question. In the perfect world, when do you expect to see the first ore processed in the mill?
Well, I think at this point, probably looking at some point in 2027 is when we'll look to start producing there. So it's a question of getting the license renewal completed. As I said, we're doing some kind of pre-construction work right now to strip down old bits of the mill that we're going to be replacing. And so we're hoping that that'll shorten the construction period once we've got the license renewed. So we're looking 2027 is probably the time frame.
2027. Okay. Are you open for securing any offtake agreements in the meantime? And I mean, at these price levels, or would you wait, or what is your offtake strategy?
Right now, we're not in any rush to jump into anything. Obviously, you see where the price is today. We can sell, at a price, at the price today, or at some point in the future. In 2 years, we expect to see a higher price. So, locking ourselves into, a price, where it's sitting today, I don't think makes a lot of sense for us. We certainly are bullish about the market, about the opportunity. So we think the price is going to be going up. So we'll probably look to lock in closer to the time of production if we do decide to go down that path. But we certainly wouldn't lock up 100% of production in any case. We'd be looking to, take advantage of, the volatility in the market, and then, have some kind of stable underpinning, through 1 or 2 contracts, which represent, a small percentage of our overall production.
Yeah, that definitely makes sense. Corey, what about Velvet Wood project? What are you currently doing over there, and what are the plans for 2025?
So we've been working on a plan of operations for some time over there. So that's, essentially when you get our mining license. We're in the process with the state, going through kind of a request for additional information with the state. We'd expect to see that plan of operations provided to us this year. And so once that is up and ready, then we can start getting into the mine itself, start dewatering, start stabilizing the underground, and get it prepared for production. So that's what we're aiming for this year. Probably second half of the year is, we're hoping to get underground. But it all depends on how quickly the state moves on getting us our plan of operations.
Sure. Same question for Slick Rock.
Yeah, so Slick Rock is probably a little bit behind in terms of, where it sits. We've just completed a drill program, as I mentioned. We aim to provide, those results in the coming weeks to the market. But that allows us to also, upgrade the resource. Currently, it's an inferred resource at site. We're looking to move that to M&I. We're also looking to confirm some of the areas of the targets that we thought may have some mineralization. And so that the drilling will also help to confirm that mineralization. I think ultimately this year we'll be looking to get, an updated resource at site. And then we'll determine whether or not, we want to continue drilling, or if the resource is sufficient enough for us to start moving towards a plan of operations there.
Okay, so you are going forward with that project. What about West Slope?
West Slope, pretty similar. We've got a number of Department of Energy mines. Mines. We did pick up a few others, about a year ago. So we have about 20 or 21 DOE leases that, of which we will pick the most prospective and, look to create some kind of resource at site. Some work will be done on the reclamation side. Some of those properties don't have much ore left. And so in the near term, they're not worth spending time and efforts trying to move forward for mining purposes. But so we'll have, a pool from which we'll decide, the best ones to move forward with. But it's a nice problem to have because, we could certainly have a long-term sustainable production opportunity in Colorado, both vanadium and uranium. So, we think that given, the near-term opportunities with Velvet Wood and then Slick Rock, DOE leases aren't that far behind, and obviously we've got kind of longer term prospects in places like Arizona and New Mexico.
Yeah, when you mention New Mexico, you have Marquez, Juan, Tafoya project, the one you acquired from Anchor Energy, which is, by the way, you're also a big shareholder. What's the plan there?
So that is, as I mentioned, is a longer term plan. There's certainly some work that we can do there. We've had a discussion around, does it make sense for us to look to high grade at site and ship to Shootaring? We'll probably be moving forward to understand, the economics a little bit better at some point this year. But ultimately, that is another project which will probably be a longer term, kind of 5 years out for production with Shootaring, unless the uranium price goes crazy and all of a sudden the economics are too good to pass up in the near term. But certainly we're looking to create kind of a 20-year, 25-year mine life amongst all of our projects. With looking to 2 to 3 million pounds per year of production. So we think that Juan Tafoya is going to play a critical role in that path, but certainly we'll be looking to other prospects to make sure that we can continue to sustain that kind of production profile going forward.
Okay, are you working anything on Frank M deposit at the moment?
We're not. Frank M is a lower grade. While it's very close to the mill, it's a low grade deposit. It's something we'll probably use if we need to downgrade other ores coming in from Colorado or other places, just to make sure that we can maintain a similar grade of all the material going through the mill. So I think that's probably where the value of Frank M would come in the near term.
Okay, we are moving to a lower scale of your non-car projects. Findlay Tank Brescia Pipes. What will you do this year on this project?
Well, I don't know we'll do much this year. Obviously, Arizona and the North Rim, like anywhere around the Grand Canyon, is a bit of a challenge.
Or Date Creek Basin as well, right?
Yeah. So, what we're going to need is some kind of critical mass to do more work in Arizona. And, we've been looking at a few prospects in the area. So if we can get, significant mass and significant resource, then Arizona becomes a lot more interesting. But, as I said, we've got a pretty big pool of assets in the near term. We certainly want to keep finding more pounds because obviously we don't want to deplete the pounds that we have as we start producing. But I think in terms of, order, I think we're sticking with Utah, Colorado, New Mexico, and then probably Arizona after that, because we don't have the same number of pounds, but certainly there's some prospects in Arizona that we would be interested in and certainly, work towards. And that may change the order depending on what we end up with in Arizona. But, I think Arizona is still a very interesting and prospective place for us to operate.
Yeah, it is a big pool of assets. So would you be open for any JV or sale of non-core assets at the moment?
At this point, probably not. I think we need to really assess how can we get all these pounds through the mill, and does it make sense for us to be the ones spending money to advance the assets, or not, or finding a partner in that regard. I think right now we're focused on doing it all ourselves because we think that we've got the bandwidth. We're bringing on more staff to do some more assessment work for us. So I think that we've got right now the opportunity to really assess the asset pool and decide what is the best path forward. But certainly in the near term, we're dedicated to getting everything done ourselves.
Fair enough. Final question, Corey, Newsflow from the company. What can investors expect and when, of course?
Okay, well, we've talked about the U.S. exchange, so that news will be a 2025 event. We talked about resource upgrade at Slick Rock, drilling results at Slick Rock, the plan of operations at Velvet Wood, the potential of acquisitions, the potential of determining a production plan for Marquez Tafoya. So there are a number of things that we have on our plate that we've kind of put aside while we're going through the prospect of a sale. But now we can hit the ground running. I think one of the big ones is the reactivation plan and getting more detail from the state and advancing that to the point where we can get the license upgrade. So I think that's another one that's kind of lurking in the background, but hopefully we'll have some updates along the way.
My apologies, this is the last question. I didn't ask you about the uranium market. Give me your opinion on the current uranium market sentiment and what do you see for 2025?
Yeah, look, I think it's, I think we've been very bullish for some time. Now we've got, with the new election in the U.S., we talked about the new Secretary of Energy nominee, who's extremely bullish on nuclear. We see that production coming out of places like Kazakhstan, is dropping. The partners of Kazatomprom are talking about, decreased production year over year, and I expect the prospects going forward are probably going to be pretty similar. So, when you've got, dwindling supply and demand growing, not only in North America, but in Europe and Asia, I think all that can do is push the prices even higher. So we're very bullish on the uranium market, and, we expect to see, significant, uptick in the price in 2025.
I hope so. That was Corey Diaz, Anfield Energy CEO. Corey, thank you for this interview, and let's update shareholders when we will have some news.
Great. Thanks for your time.